logistics, and now leading the Indian ASEAN automotive skills forecasting team. Mr. Puneet has worked in almost each and every domain of the industry. He has written multiple editorial contributions, has spoken in national and global conferences, and is widely quoted in the media. Today, he is going to enlighten us on the outlook and trends of the Indian automotive market and touch upon government policies, OEM vibrancy, and Tier 1 readiness. On behalf of everyone at Gyanki, we would like to welcome you, sir.
Thank you very much, Team Gyanki, and thank you very much, Shashwat, for the introduction. Happy to be at your platform, and I think it's a great, initiative by you all. How we are going to go about in this webinar is that, to set the tone, we will start with, a presentation, which will be around 30 minutes, where I think I can talk about, how the global industry, India is doing, and how specifically, we'll be talking about Indian automotive industry in detail. Before I start, just a quick introduction about IHS Markit. For those who don't know, we are a $44 billion company, and we have roughly around 16,000 employees listed on New York Stock Exchange. We have roughly around 50,000 customers, and we cater to almost 85% of the global Fortune 500 first customers. And we are a pretty diverse company. We work in chemicals, energies, marine, aerospace, so multiple sectors. Obviously along with finance, autos, and energy being the core ones for the business. And recently we have been acquired by S&P. So though I think it'll be more formal, as we move forward. Here is, the agenda for today's session. So I'll be, starting with a quick global outlook, as I said, and then if from the India perspective, we'll talk about the COVID-19 impact, and primarily what are the disruptive trends, what we have been seeing because of COVID-19, because I think we all agree that, tomorrow is not the same, what we have been seeing in the past. So then we'll have a look at, industry volume. So how do we see India market, OEM market shares, and maybe a few trends. And then maybe we can take the Q&A session. So starting with the global outlook, so I think definitely, this was one of the unprecedented crises, and we have seen, automotive industry or almost, that way every industry falling. And definitely the damage due to this pandemic has been colossal, and every country, every market was impacted almost at a similar time. So I think if we compare the different crises, definitely this was a pretty different crisis, as it was neither economic crisis nor a financial crisis, but actually it started from human crisis, which led to economic and financial crisis. But interestingly, we had seen a lot of support, a lot of incentives from the government, which primarily came in form of helicopter money. And we saw, that the degrowth or the free fall, what happened was somewhat arrested, towards the last quarter or second half of the year, depending upon country. So I think by the time we finished 2020, so this is cars plus LCV data. So in 2019, we did around, 89 million units globally. And this year, it is expected that, the world will finish by something around $76 million, 76 million units. Roughly a degrowth of 15%. So here you can see, all the global markets, we have seen, South Korea recovered quite decent. It's the only market in positive. China, roughly around minus 5%. So I think they did great towards the second half of the year. And if we see the emerging markets, typically like if you see India or ASEAN markets or South America, I think typically if you talk about India, the COVID started late in India because we had a quite a early lockdown in India and quite a long one. So that is why, maybe the crisis started at a much later stage, and that is why the effect is visible, in these numbers is more. But otherwise, yeah, every market fall, which was definitely, not expected. But I think the good part was that definitely, there was a recovery. So now if you see, how we see next 7 years, so I'm not going to put much time on it, but I think you can clearly see that India is one of those markets, which will be driving the growth globally. And by 2026, we feel there would be a CAGR of 4% globally. But if you talk about India, so India will grow at a CAGR of roughly around 9 to 10%. But this is also because, in 2020, we have actually, being touching something around 2.6 million units. But otherwise, yes, recovery is good. And if you see, role of each of us, it may be anybody who has to do with automotive industry. I think you can clearly see that we will be the fourth largest cars and LCV market in the world, just behind China, United States, and Japan. So definitely the role of each of us will be more important. It will be, so I think the primarily, anybody who specifically who are working with new technologies, electric vehicles, or connected cars, or maybe, I think with more and more OEMs looking forward to India. I think everybody may have a bigger role to play. So now, coming back to India, so I think because there was a request regarding, if we can clearly go through the COVID-19 impact. So I think, when we see, I think definitely there was, the balance sheets have been impacted because of COVID. But if you see, I think automotive industry in India had a clear great rebound, right? But I think this is not the case only in India, right? So globally also, if you see, I think you can see here, that automotive has really rebound across the markets, right? So I think this is a sector-wise. On the left side is the sector-wise performance, and you can see that the autos tops, in terms of all the sectors. And in terms of recovery, if you see, typically in October, so I think in India has been among the highest recovery markets. That's why, if you see, we clearly had a V-shaped kind of a recovery, in India, typically in automotive. And exactly, if you see, even in past crisis, which was Lehman crisis, we saw a similar kind of recovery in India. But now I think this time the difference is, whether this kind of growth is sustainable. I think we'll be covering that, as we move forward into the slides. So I think till now the story is great, so we are having a V-shaped recovery, which is good. We are seeing the volume levels pretty high. But now, the question is sustainability, as I said. So if you see, containment index, and if you actually focus, just a second, yeah. So if you actually see this side, right, so you can clearly see from Jan to April, we are seeing that, we may have some sporadic kind of, partial lockdowns, there is a possibility, because we are seeing some kind of a resurgence, typically, and as soon as, we see the economy opening up in terms of, like, the schools opening up, malls opening up, travel opening up. So there is a possibility, that actually, we may see another kind of a bump going forward. Because still, I think in most of the global markets, so vaccine will start. Maybe in India, it will also start. But yeah, the kind of population we have. So I think it will really take time, for our country to really vaccinate everybody. But interestingly, I think one of the other thing, if you see, still, in spite of the fact that, even if you talk about markets like China, or if you talk about markets like uh, like United States, right? So you can see that there the containment is coming down, but it is not back to zero normal, right? So I think this somewhere reflects, right, that that the tomorrow is not the same as past, right? So I think everybody is going to follow a different approach. So what we are saying here is, that a lot of things have become digital. I think we'll be talking about digital dealerships, how they are changing the business or the retail scenario in India. But yes, I think it's very clear that there is some kind of, social distancing norms or some kind of, masking, so which is going to remain. So which is definitely going to change the business models of almost every sector, of every company. So now, I think if you see the index, like how we see it in the next 1 year, right? So India definitely the recovery will be lesser relative to the other big global economies. This is definitely because in India, it will take more time for vaccination, and obviously we may have certain budget constraints. But other part is, if you see, I think so. This is the real time trends of how a consumer thought or consumer trends have changed, right? So I think if you see pre-COVID, right? So this is like the levels of usage of Ola and Uber, right, or usage of Delhi Metro, right? But now, if you see, post-COVID, I think those levels have still not been attained. So I think it's very clear. So even in case of metro, if you see, so people not the same passengers have been using the transport. Similarly, if you see other trains, right? So I think it's much lower. So I think that this clearly reflects that somewhere, people are avoiding public transportation, consumers are avoiding shared transportation, and primarily, it is like that the personal mobility is definitely getting an edge over the shared mobility, right? And that's why, if you see top companies like Hero in two-wheelers and Maruti Suzuki in four-wheelers, I think we can clearly see, I think the demand for their products is much more than what it was pre-COVID level. So I think pretty interesting to see in terms of data, because we have been hearing these things or reading these things in news, but to quantify them and putting them, actually gives you confidence that yes, this is something what is actually true. And primarily the forecast what we build, all these things, they go into it. Similarly, if we see used cars versus new cars, I think new cars have almost reached the same levels what it was pre-COVID. But if you see used cars, yeah, in between there was a kind of a bump. Post-COVID, there was a huge demand for used cars, but it was primarily because the new cars were also not available, and primarily there were a lot of consumers who wanted to go light on pocket, and they were considering used cars. But now slowly and slowly we are seeing that used cars is coming back to their normal levels from those high peak levels, but new cars are getting back into the scenario. So I think now I think pretty important is scenarios, because I think when the people who are working in strategy or who are working in product planning, volume planning, I think for them it's really important to see how do we see 2021. So I think clearly, I think it'll be pretty optimistic to say that 2021, the demand would be sustainable. And primarily, in IHS, we are pretty cautious, and, even will advise that people should not wear tinted glasses and keep on seeing the optimism around, like what has happened in last 4, 5, 6 months. Because somewhere I think we all have to agree that there was a damage to every business. There was a damage to the balance sheets. A lot of people have lost their jobs. So I think somewhere that impact has to come, right? So primarily right now it was because of a lot of liquidity in the market that we are seeing this kind of jump. Obviously, apart from other factors like fear of public transportation, but But nevertheless, what we feel as a base case, that I think it will take few, maybe 6, 7, 8 months before we really see this kind of sustainable demand. And I think on a pessimistic case, it would be that it takes little longer, maybe a year or year and a half, before we see this kind of sustainable trends. So I think post-COVID, so these are the few just top level, things what we have been observing. So I think earlier it was just like, the demand of top variants was around 90% and lower variants was around 10%. But now, post-COVID, we are seeing that, the mid variants are really catching up. So obviously everybody wants to cut on their loan. Everybody wants to be easy on their pocket. So I think a typical trend what we have been observing. So then I think a B segment, so we also do real-time trends for a segment level, right? So I think here we are seeing that B segment, A segment cars, are really in demand. So um, and this is going to put some pressure, on players like MG Motors, which are primarily into cars, more than 15-20 lakhs, or maybe C segment cars, which fall in their category in India. So then I think one of the key things maybe here we can talk about is that obviously, because of COVID, we have been seeing that R&D projects, primarily new model launches, have got delayed. And and because of this, it will put pressure, on suppliers as well as OEMs, because we are seeing that there is because the OEMs don't want to clutter their new model launches, right? They want to put it at a certain gap. So I think this will tweak the entire model plan, and I think accordingly suppliers and OEMs may have to work. And actually, all models may not be required now. So this is also a thing we have been observing globally. There has been a refresh reset, of the model plans for all the OEMs across the globe and in India. So then flip to digital. I think that's a big thing. What is happening today? I think so. Every dealer, every OEM, is now digital, and I think we'll talk about it. Maybe in case you have any questions on that. Then ride hailing. I think mobility was the biggest disruptor, in India and across the world, and primarily shared mobility has really gained a lot of importance in last few years. But surprisingly, this biggest disruptor, was disrupted by COVID. I think this was something, which is very important. And globally, actually, the impact is much more. In India, it's also there, but we feel that maybe, in next 6 months to 1 year, I think. People have to get back to shared mobility because we have not good public transportation. I think shared mobility is the need. It is relatively economical, and obviously it's easy. So I think in India maybe the impact in from the mid-term, longer-term perspective would not be there. But yeah, globally I think people may look out for more hygiene or more personal mobility solutions. So then I think coming now to quickly on the macro front, I think I'm not going to spend time here, just one slide. So I think because macro is the basis of our forecast, of the numbers what we develop, and these are the assumptions, what we take in macros. So these are just few of them, but yeah, these are just the critical ones. So I think we can clearly see that this year, the GDP growth rate, the GDP will fell down by around 10%, but next year, we may have a similar rebound. So I think that is good, but nevertheless, you can see that there is some loss of GDP, which translates into some loss of auto sales unit also. And even going forward, we may see that the GDP growth rate, typically the very next years, after 2021, we may see a kind of a dip, because this hike next year you are seeing because of the low base, in 2020. But otherwise, even if you see in the coming years, so GDP growth rate have been lowered, relative to pre-COVID levels. Similarly, inflation, I think inflation definitely can be one of the biggest bottlenecks for our industry, for our economy. So I think, uh, yeah, so I think In terms of inflation, yeah, so I think we have already started, seeing the environment of conflation, which is a combination of contraction and inflation. So on one side, the GDP is contracting, and on the other side, we are seeing the inflation also touching 7%. So I think what it can really damage is, that we may not see interest rates, or it will be very difficult for RBI, to maintain lower repo rates, which can actually impact the industry. But again, this is a little pessimistic case. But broadly, yes, the inflation has been going up, which can be a cause of concern for government and for RBI. So policy interest rates, yes, in our assumptions, we are still taking them stable, because we feel that government really may not allow inflation to go up, as the things becomes normal. And I think fiscal deficit obviously is a big concern, because there is a lot of outflow of money from the government. From the government pocket. So I think that it will be very difficult to maintain fiscal deficit. So now, if you talk about Indian auto industry, so it's today it is just tied up and have become a big puzzle. So on one side we have a lot of structural policies which the Indian auto industry has to face. It may be in terms of for example, I think our Prime Minister is looking forward to Atmanirbhar Bharat, self-reliant India. But on the other hand, our OEMs will have to really, rethink on their entire sourcing or supply chain. So I think this is really putting up a pressure, on most of the OEMs as well as suppliers, because now, I think everybody wants to make in India, to get in a line with this policy. And we have been already seeing, that suddenly government have become obsessed on quality, and which is great, because earlier I remember it was being used to said that whatever you make in India, you actually lose just 1/3 in terms of wastage, right? So, but yeah, it was primarily because of the quality levels. But now, maybe if yes, we have a better technology. I think if Atmanirbhar Bharat that catches up, which obviously everybody is working towards. But again, it will be a challenge for auto industry, because they have to kind of rethink from scratch, typically for certain components. So then I think on one side we have structural changes. We had GST, which was great for auto industry, but on the other side, we have a lot of regulations being coming up. So we already have seen BS4 to BS6 in April. We have multiple regulations which have come up, and because of which, the cost has gone up by 20% for cars, roughly in almost 2.5 years. So which is phenomenal, right? So and typically in market like India, where the consumer is quite price sensitive, I think this kind of price hikes can actually be deterrent to growth, and primarily because primarily we are still at car park levels of roughly around 34 vehicles per thousand, and actually if the car prices starts going up, then it will be very difficult, and we will somewhere be somewhere around those levels. But otherwise, yeah, right now I think, but everybody's frugal in their approach, and we are seeing OEMs getting cautious on that front, and primarily, we really look forward. By 2020, India car park will quadruple, roughly around 130-35 per thousand. So similarly, we have some interesting, drivers for 2021, which can be scrappage scheme. So it will be for the first time, we'll be seeing such a scrappage scheme. So though we are still not sure, on the monetary part about how much government will support, but nevertheless, I think it will support the industry, and it can be the big drivers for 2021. And then intra automotive, I think within automotive itself there are a lot of changes which are happening. The industry is reshaping. The ABC of the industry is redefining, and we are seeing a lot of players also exiting India, like GM, Ford partially, or Harley, and then be a lot of fuel mix complexities. Maybe we can take a question there later. And then shared mobility is taking a new shape. So I think within automotive itself, we have a lot of technological changes which are coming, which and obviously things like EV are a big disruptor. in India and across the globe. So then I think quickly, coming down to the numbers. So I think by 2020, in 2020, we expect something around 2.6 million units of light vehicles, which is car plus LCVs less than 6 tons. But we feel that, by 2035, so this is as per IHS forecast, so we should be somewhere around 9 million units by 2035. So which is great, so we are going to see a good growth in coming years. I think there is no doubt it is primarily because of the fundamentals we have, right? So because we have a income levels which are rising, we definitely, consumers are becoming more aspirational. We may have much more urban cities, which means that people would be requiring cars going forward. So I think if you talk about, then what is exactly is going to happen, or what has happened in 2020, I think rural India has been on the front seat driving the sales, and one of the big reasons was Manrega also, because if you see the budget for Manrega, so that was actually 1 trillion Indian rupees. So you can clearly see it was really hiked, from the last year, and primarily that money, has come into the system. And even if you talk about the daily wage rate, so primarily that has tripled. So somewhere that money is coming into the orbit, is coming into the rural economy, and we are also seeing a big consumer shift from consumers being moving from urban to rural markets, which is also helping. So overall, I think rural India has taken a front seat in 2020, and maybe I think the same will follow in 21. And then, I think retail financing is something, which is really big driver for growth in 2020, and hopefully in 2021 also. We feel, I think I just showed you in the before slide that we are assuming that repo rates will not be touched in next year also by RBI, in spite of the fact that inflation may go up or has already started going up towards 7%. So obviously, I think last time when this kind of repo rates were there, so we saw a kind of big recovery, a big massive growth in the auto industry. So similarly, I think you can see that we are at the same levels now, and we have already seen automotive growth picking up, and this can actually pick, in case if the party is not being spoiled, by the other economic challenges. So I think just quickly on the market share, or on the OEMs, I think this is the market share. So here we include LCVs also. So it's basically market share for cars plus LCVs. So that's why, but yeah, so here broadly, we can see that obviously Maruti Suzuki will continue to lead, among all the OEMs, and and even 2026 Maruti Suzuki will be the leader, but nevertheless their market share will reduce. I think since we do model level forecast, so I think we can clearly say that with good confidence that yes, the entry of new players will definitely impact, the leader in the Indian auto industry, and same kind of market share levels may not be realistically possible. So I think the big gainer here will be Hyundai Kia, because I think we have already seen Kia being a big disruptor in India, and Hyundai Kia together, I think they have been really eating out the market share from Maruti Suzuki. So then, I think then the third player, biggest player, can be Mahindra's. Obviously, right now we are seeing, because of the transition from BS4 to BS6 in diesel, Mahindra is going through a rough time, but we are seeing a pretty solid product portfolio from Mahindra together with Ford, which will really help them in maintaining their market share. So similarly, I think Tata is pretty strong. I think we are seeing multiple launches from Tata, and even their product portfolio remains strong. But yes, maybe in terms of the OEMs, which will be losing on market share, can be Ford, then it can be VW, Skoda, because their product portfolio is also not pretty solid. So though they are coming up with new products, under a new brand, but interestingly, it may not be possible for them to what they have been enjoying 5 years back. So similarly, Honda can be one of the players, because we really don't see any new big launches here. So then I think in terms of body types, I think clearly, I think just a decade back, I think we were a small car market. But now, I think typically the mini cars. So I think consumers have been moving up the ladder, and today I think 36% of the market just left out is mini cars, and rest has moved towards SUVs. So purple is SUVs here. So you can see the SUVs have gone up from 9 to 24% and is expected to go up to 30% in next 5 years. And this is primarily because we are seeing multiple launches by every OEM in this category. And primarily, we are maintaining sedan as constant because we feel that the first upgrade will be hatchback or sedan, and then the consumers gets into SUVs as he upgrades onto his next car. So then coming on to EVs, I think this is on a little optimistic side, but yes, we do feel that in cars, the EV penetration can be something around 9% by 2030. So again, this has been this has been said keeping in mind, in case if we have a pretty strong frame 3, somewhere in 2022, 23, and obviously if the battery cost reduces, which obviously everybody is taking that assumption, and obviously if government or state governments, I think the central government have already done their job by putting EVs in a 5% vehicle in a GST category by announcing FAME 2. Then FAME 3 can be more focused towards cars and LCVs. Like FAME 2 was more focused towards two-wheelers. But nevertheless, I think so this is again on a little optimistic side because right now, on ground, I think there is a big gap. But yes, that's why, in 2025, we are just talking about 2% penetration in EVs. So this is in cars and LCVs, though in two-wheelers and three-wheelers, definitely I think the penetration levels will much go, and this is very much in line with what Indian government is looking forward to. So then, obviously, I think these are the key takeaways. So I think primarily just a recap of my presentation. So I'll just cut short here. So yeah, so I think industry has been going through a lot of headwinds. As I said, it may be in terms of regulation or structural policies, or in terms of obviously COVID has further added to all that pain. So overall, we do feel that yeah, industry has been going through tough time, but interestingly, the structural changes which have happened in the last 4 5 years in India related to GST. So we feel that that is going to give back to auto industry, in days to come. So with this, I think thank you very much, and maybe just few things. For you for from the export perspective, so I think if you see, definitely, so this is our export dashboard. So in 2020 we are expected to export around 541,000 units. And so the top market for export for India is Mexico right now, but because of the PLI scheme, what is expected to come and applicable from next year, so we feel the export levels will actually go up in India. So even if you see, so we are talking about an upgrade from 550 to around 880 export levels, and a big part of that exports being going to sorry, I need to click here. Yeah, so a big part of that exports actually being going to markets like South Africa, Mexico, Saudi Arabia. So but we can really tell you that a lot of OEMs are exploring a lot of export markets from India, and actually the PLI scheme typically in auto sector can be a big boon for the auto industry. Similarly, I think these are the few trends, like this is for CNG. Like globally, CNG doesn't sell, but yeah, in India, we are talking about the increase in the market share of CNG, and Maruti will be leading all this change. Similarly, I think if you talk about diesel, So I think in diesel will so you can clearly see that the share across the globe is falling, whereas and I think that is true for India. So this figure looks more primarily because this includes LCV. So if you talk about players like Maruti Suzuki, so they have exited diesel, but we feel that they will make a comeback typically in the bigger vehicles. So I think, and I think we can quickly have a look at electric also. Yeah, so I think here, you can see that this is our global electric vehicle penetration. So you can see, what we are expecting right now. But obviously, after COVID, we are seeing that the demand for electric cars have got accelerated, and we may see actually much better scenario. So I think, yeah, so we have a lot of stuff to share, but I think because of time constraint, we move on to Q&A. Thank you.
Absolutely. Thank you so much. That was really, really informative. Um, I have to say that right at the end, when you were running through those numbers on that sheet, I was actually very jealous that you had access to data like that. It's very interesting to see how you guys are seeing the industry take shape and sort of how consumer trends are shifting, how the industry is trying to cope up with the current challenge that we had with the whole COVID thing. Plus, in general, how the for example, we have these import restrictions. Is something someone in the audience just mentioned. Um, how these things are affecting these product sales and stuff like that. So going into questions now, I think my first one is very relevant to this area. Um, so we are seeing from OEMs, especially four-wheeler OEMs, like even two-wheelers in this case, there is a difference in approach when it comes to EVs, right? Uh, we just saw that you don't expect to see you just expect to see a 2% take rate in the next 4 or 5 years. But even then, like if you look at major OEMs like Tata, Mahindra, or even in two-wheelers, Bajaj, Hero, some have taken to EVs very quickly. They are trying to penetrate the market, taking the first movers advantage. There are others who are taking the mid road, where they are thinking that hybrids are still a better solution. And then there are others who are just waiting to see how the market shapes up. So what do you think? What does this tell us? Like from a because like you're just talking about the disruption, like the breakup, right? That eventually in 5 or 6 years you see the market share being taken away from Maruti Suzuki. In that terms, right? Every time there's a disruptor, it could completely break up and change those numbers. So what do you think from say not a 5 but maybe a 7 to 10 perspective?
Yeah, so I think firstly, Harsh, I think I can really say, that EVs are going to be big disruptor, right? So EVs are inevitable. So I think this is what we generally say. And I think this is true because if you see, I think globally, so I think that is becoming a kind of a threat for the ICE engine industry today. And primarily, if you talk about India, I think there was a time, maybe a few years back, right, when every OEM wanted to be in every fuel mix, right? But today, I think the scenario is pretty different. If you talk about Maruti, right, so their focus is a lot on CNG, whereas none other is that much focus like what Maruti is today, right? So if you talk about Mahindras, right, so I think they are, or Tatas, they are really pretty aggressive on working on electric vehicles, like you said. So I think, similarly, if you talk about Hyundai, Kia, they really want to be in every fuel mix. Right. So I think there are, so we are seeing a pretty different approach, right, for every OEM now, and every OEM wants to be kind of, leading in their own areas, in their own fuel mix, because I think the market is different, and I think we are a pretty heterogeneous subcontinent, right? We have every kind of customer in India. So we have a customer for A segment, we have a customer for B segment, we have a customer for diesel cars, we have a customer for EVs. So the only thing is that how the government policies, what shape to take, and ultimately who will be the winner, right? So we have seen, I think in last decade it was the diesels, right, which really turn around the market, typically for players like Maruti Suzuki, right? They were really able to maintain their leadership. But then, I think the next decade nobody knows what it will be, but we can really say that, every OEM is following up a different approach, a different percentage in fuel mix, and actually, maybe I think it has to do at their origin level also, because Japanese OEMs are more focused towards hybrids, right? We are seeing Chinese OEMs, they have been working more towards electric, but yeah, so unfortunately, I think because of India-China issue, so there is a delay. But yeah, we are seeing, Indian players like Tata's, Mahindra's really focused on electric vehicles, and then, players like Hyundai, Kia, so they are focused on all fuel mix, and they really don't want to lose the India opportunity. So I think so next decade is going to be pretty different what it was, what we have been seeing, and I think it's just time, and we really need to see who will be the winner.
Makes sense. Makes sense. So now, sort of moving away from the OEMs and going to the consumer side of the things, right? We often talk about how the Indian market is a very value conscious one, and fuel economy, ease of ownership, and things like that. We've been like every major economy or a country has a certain bracket or an average sale price of a vehicle, and it's sort of a two-pronged question. One is that we sort of, maybe COVID is to do a lot to do with that, but we have been seeing like the recent numbers from FADA were said that the two-wheeler year-on-year sales were about 20% down. The only area of vehicle sales that did good was the four-wheelers. It was not great, but it was still in the green, right? So that's one thing. So are we seeing customers or consumers not be as value conscious as they were, and they're looking for, and again, another example where Kia comes in, right? They wowed customers with a product. So we are seeing that if you can bring a product that can uh, emotionally appeal to your emotional self, then people don't mind spending. And the second part of this question is, we have seen, in some cases, right, especially in the EV manufacturers abroad, where they have moved away from the whole dealership model, right? They're going direct to consumer. So if we, with both of these things in mind, how do you see, like, what are your thoughts on in our context? Does something like that work? Does something like that be something better for the consumers, or a better way to get to consumers to sell products? Because we say that yes, the last 4 or 5 months were bad and sales were down, but we've also seen that for really good products, people were ready to wait. They had the bookings done even during the COVID period. So there's this massive shift that maybe not so visible right now, but definitely seen, where if there is a right product and the right way to sell it or approach the customer or consumer, they are willing to spend. So what are your
Yes.
thoughts on this?
Yeah, so I think Harsh, first let me take your second question. I think there is no doubt that this pandemic, has accelerated the shift towards digital. From a traditional brick mortar, setup, we are seeing a click mortar, setup, which is like, every customer wants to sit on his laptop, and go to the website, explore the car there, and maybe, we are seeing even the dealerships are tuning their executives, to interact with the customer on WhatsApp, do a video call there, and even we are seeing the deals getting closed, right? So I think, so going forward, obviously I think digital has already taken a good pace, and thanks to pandemic, that way, that everybody, irrespective of the age group, is getting into digital. And this is not only in automotive, right? So we are seeing, lot of virtual visits, right? So there are robot tour guides today. So similarly, there are a lot of remote tours, whatever are happening. Similarly in medicines also, we are seeing telemedicines, transculturing. So I think a lot of things happening, and I think auto industry is no different, right? So we will really see, that this will really take pace, and everything will be closing down on the internet, or maybe the digital way. So now, coming to your first question, I think, in terms of what you were saying, consumer trends, right? So I think as I already said, right, that India is a pretty heterogeneous subcontinent market. So we have a customer for every product in India. So nevertheless, we had too much value conscious customers, which India as a culture we would be always looking for value. But I think the definition of value would spread across not only price, it will be also a product, it will be also features, it will be technology. So I think that value will spread out across multiple things, not only on price. So that is why, even if you would have seen my segment share, we are talking about more of B and C segments, being going up in India going forward. And actually, maybe in next 1, 2, 3 years we may see, some kind of mini cars also going up. But nevertheless, I think it is more of B and C segments where the OEMs would also like to focus on, because OEMs are here for business and profits, and actually selling a car with such a technological features in a mini car segment is realistically impossible now. So I think, and with so many regulations in, so I think B and C segment will be the future. I think both from OEM perspective as well as from consumer need, because as I said, the income levels are rising, right? The aspiration of the Indian consumer is typically rising. Like suddenly now, just to give you an example here, we have been talking to OEMs, and we have suddenly seen that in rural markets there has been a need for better cars. So it was primarily because there has been a lot of urban consumers who have moved to smaller cities, right? And now they are looking for a better car, right? So it is not like that. So I think there is a shift, right? So we are seeing, and primarily I think digital thing is making things more easy, because consumers are able to give more time and understand the product better. So I think consumer will always be price conscious, value cautious. So I mean to say a consumer will be more value cautious, not price conscious.
Right, right. Yeah, I agree. B and C segments are always have been and will be the target area. But I'm guessing the average transaction price is more where my question was, that we will see them rise as these segment of cars get more and more features
Yeah,
added.
exactly. So I can give you a example here. Just like 5 years back, the average price of Indian car industry was roughly around 450,000 rupees, around 4.5 lakh rupees. But last year it was around 6.5 lakh rupees, right? So just in 5 years, the average price of the car in the industry has gone up tremendously, right? So obviously, thanks to regulations also, because of which the prices have gone up, or maybe the average price of the industry has gone up. And even going forward, you will keep on seeing that this average is actually moving up.
I agree. Okay, so let's take a question from somebody in the audience. So there's a question that somebody's the Chaitanya asking, in terms of EV, do you do the import restrictions, right? We've seen what's happened in the last year, how there's a lot of focus on not importing products, trying to be Atmanirbhar, especially imports from China. Uh, Plus, we recently also saw in the news that there was a disruption in global shipments, containers not being available to ship. Uh, so all of these things, I mean, they could be temporary, especially the import restrictions could last for a while. But overall, we might see impacts of COVID last for a few more years. So how do you see this impact the OEMs? Like, how do you see the OE's plans be impacted? Does the product focus change, or do they stick to what they were looking for? What are your thoughts on that?
Yeah, so I think we really need to be pragmatic on there, and primarily not only pragmatic from OEMs or suppliers, but maybe from a government perspective also, right? Because I think one thing we have to understand, I think definitely after COVID, after globalization, it is more of a regionalization area, right? Where every OEM or supplier is looking forward to. But still, I think there are a lot of things which as a country, as a OEM or as a supplier, we really need to import from China, right? So, and I think a business and somewhere politics should not be mixed, right? And hopefully, I think next year we may see some better policies out there, because I think right now because I think we are a country where we don't have too much on the technology front right now. But definitely, I think OEMs or suppliers are looking forward to investments, right, going forward. But I think yes, this kind of a disruption in terms of supply chain will continue for maybe few more months. But and specifically, I think we have to agree that we are living in a VUCA world today, which means there are a lot of uncertainties. Like nobody knows, about whether really the car sales would be what even half of what we are selling today, right? Next year, if anything goes bad, even after vaccination. So I think we are clearly in a volatile scenario. So the demand pattern, the consumer patterns are going to be changed. They are going to be very, very, we are going to be in very fluid situation. And in case if there is any, such concern like at the customs, or if the supply chain is not seamless, then obviously, everybody in industry will bear the loss, because of it. So it may be consumers, so maybe the OEMs will increase the prices, so consumer may have to bear that loss, right? So some OEMs may really lose on market share, if their dependency is too much, on certain country or certain market. So I think depending upon, exactly, so but I think OEMs will try to follow a more risk, a less risk approach, in their sourcing going forward, and they're not going to depend on certain markets. I think that is very clear, and maybe localization or indigenization would be the key. I think the companies who are really working on technologies, I think they will be the real big gainers out there, because if you really want the skill to get incorporated in the employees of suppliers or OEMs, I think they have to invest. So definitely, I think maybe platform like yours, or maybe the companies who are giving a kind of technological or skill training, I think that they are really going to gain out of it. And we are going to see a lot of partnerships being coming forward, because now you really can't, now the times are gone, when you really used to make partnership by choice, right? So now we'll be seeing some kind of forced partnerships. I think one almost from a big OEM in India. Maybe next 2-3 months you will hear something around that yes, the big OEM is merging with those big OEMs. So I think partnership is really not by choice today. So I think things are changing very fast in auto industry as well as in India, and maybe I think let's see how it goes. Yeah.
Makes sense. Okay. All right. So again, a lot of questions, but not enough time, like you said. I will post the final one for the day, and I think this is also coming from the audience on the scrappage policy, right? There's been a lot of talk. It's been going on for a while. Doesn't there still doesn't seem to be a clear direction on where that is going. So from the EV take rate, EV, how it affects the eventual take rate of EVs and how that develops. What do you see as something that, from an incentive front, or how the whole scrappage policy takes shape? Timing, incentives, overall package. How do you see that from a perspective where it could best help the EV technology to be adopted more sooner?
Yeah. So I think, this is the first time the scrappage scheme is going to be announced, right? So I think the fleet which is going to be impacted because of such kind of, regulation is going to be huge, right? So I think here, obviously, I think on one side, this can be a great opportunity for the government, where they can really make the OEMs or consumers think towards EVs, But I think to begin with, yeah, it may not start directly with EVs, but yeah, obviously EV can be big beneficiary to it, because as I already said, that they are on a lower GST structure, and we are seeing a lot of state governments, are now coming forward and giving special benefits or incentives to the consumers who owns them, right? So I think somewhere we will see, those kind of policies or benefits will be incorporated, right, when if anybody buys EV. And anyways, something which has to go forward. Yes, right now maybe resistance in India is more And maybe globally, I think even the global companies are planning that, yes, maybe ICE engines can go for a little longer time in developing markets. But nevertheless, EV is something which you cannot avoid, and specifically under our Prime Minister, Mr. Narendra Modi, whose vision is to give, wings. To the auto industry in terms of electric vehicles. I think there is no doubt about it. So I think government remains rigid on their stance, and I think everybody has started working in ecosystem. Yes, maybe two-wheeler, three-wheelers are working more faster, and four-wheelers are relatively more slower. But I think we will see everybody getting into electric vehicles, and obviously scrappage scheme, we will definitely see a government using it as a tool, to push EVs. But nevertheless, I think EVs is something which also has to become aspirational for an average Indian consumer, and that can happen. That will happen naturally. That cannot be forced by any government or any OEM. But yeah, that can come. For example, if today Tesla comes, maybe 2 years time, right? And then we will suddenly see that average Indian consumer looking forward to EV. So everybody is talking about EV. Even now we have seen players like Tata, who introduced Tata Nexon. I think they clearly saw that, that the product and the users who have been using it, there has been excellent feedback from them. So I think maybe the companies also have to come forward. They have to give an experience to customer, because there are a lot of, ifs and buts, of using, like some says we need infra, right? I think companies like Tatas and Mahindras will definitely come forward, give a kind of a free experience to the customers, like, giving an EV for a week or 12 or 15 days or a month. I think this way, once you drive, a EV, you actually realize what the real challenges are. Whether infra is a challenge or not. I think that is only when we will get to know. And I think yeah, products like MG EZS, Tata Nexon, so they have been really catching up, and maybe with the battery swapping and all what is coming in two-wheelers, they will really make India a consumer, moving toward electric vehicles.
Yeah, I thank you. I think you make a fantastic point at the end. It is about actually like people have a lot of questions and we have a lot of talk of how the industry is shaping up, but barely even 1 or 2% of that particular group has ever driven an EV or experienced living with it for a week. So I think something like that would be great if OEMs could offer that, hey, here's an EV, go live with it for a week and see if you like it. Sort of that would be really great if that can happen.
Yes, even there are other impediments to growth. For example, financing. I think just 2-3% of the vehicles get financed today, whereas generally otherwise it is 85% of the vehicles get financed, right? So we are seeing now, NBFCs or banks, coming forward and looking forward to finance such vehicles. So I think education awareness is one big thing, right? So I think till the time a normal consumer is not educated, aware, so I think that confidence level doesn't come, right? But I think once we see more and more EVs on the road, I think there is no doubt, that an average urban consumer will actually move on very, very fast to EVs.
Right. And just to add one, I mean, one more point or question to this. When we talk about transitioning from a particular, people are used to ICE vehicles, ICE engine vehicles, to moving to EVs full time. Do you see the advent of subscription or leasing model? So traditionally, they've never really worked in our market, right?
Yes.
They've been tried by OEMs for short periods of time, but they don't tend to really work out. Maybe it's the insurance, maybe it's the fact that because insurance rates are so low, the companies tend to keep the EMIs really high, etc., etc. But from an EV standpoint, do you think that something like that? I think Tata has been very aggressive in this area. And so do you think something like this could also help like faster adoption if the pricing could be arrived at where it's more lucrative for the consumer?
Yes. So exactly, this is what I was saying in a way that, such kind of models, can be the foundation for EVs. For example, if a customer drives an EV for a 6 months, right, and I think you get a practical leasing subscription model vehicle, from any OEM like Tatas or Mahindras, and actually in 6 months I'll be very clear, whether EV is really great for me, as a user or not, right? So I think yes, and without making a big investment, right, I'm not losing. So I think we will be going to see such kind of things. So I think, but yeah, we really feel that by 2022, 23, when FAME 3 comes in, we'll really see a big inflection point, for the Indian auto industry in EVs. And I think we all know, that OEMs are working in a big way on EVs. Yes, certain OEMs are still not bullish on it, but I think nevertheless, seeing the world is going the way the world is going, so I think India has to follow the same, right? We can't be different. We are not an isolate market. Our consumer is not, different. So our consumer also has the same global aspiration. So I think EV is the way going forward, and maybe 2023 can be the inflection point. And I think these days we have been seeing, what happened in smartphone market, right? Just in 5-6 years, everybody has a smartphone in his hand, right? So I think same will happen with electric vehicles. But yes, so obviously the players who are leading it from the front will be the clear winners.
Fair point. I think that makes perfect sense. Okay. Well, I think we've sort of run out of time. I really, really appreciate this. So far, in this, short life of Gyanaki, we've had a lot of guests who have given us a overview of the technology of components or solutions. But I think this is the first time that we are getting a comprehensive view of what the market is like, what is happening in the market, what is how are the consumer trends shifting, what does the forecasting look like. These are things that we don't usually get a lot of access, except for if we read maybe a snippet in the news. So from that perspective, I really really appreciate the fact that you had material to show us, to walk us through what it looks like, and your really detailed and informative responses to the questions. I really, really appreciate it. Thank you for your time, Puneet, and thank you from Gyanaki team. If you would like to share a few words before we call it a close for today.
Yes, thank you very much, for coordinating this, and it was really a pleasure to speak on your platform. And definitely, I wish your entire team and Gyanki all the best. And I'm sure the mission you have taken, to make everybody aware and educate everybody aware about electric vehicles, electric parts. I think that's a great mission to be on in. So I think congratulate you all again and wish you all the best. And thank you very much. Pleased to be here. Yeah. Thanks.